So go to economics chapter 32, circular flow of income. When we talk about circular flow of income, it's a model that measures exchange of goods, services and money as it's transferred between, as it moves around with economic agents like household, firms, and other part of the economy. So we call them economic agents. So the flow of money in terms of goods and services that are purchased talks about circular flow of income. So I wrote circular flow of income. It's a model of the economy in which the major exchanges are represented as flows of money, goods, and services between economic agents. So the flow of money is the major exchanges are money. Money is being exchanged for goods and services. That brings about circular flow of income. So that takes us to income, output, and expenditure. I wrote to study the economy as a whole. It is done through macroeconomics. So a key macroeconomic variable is the level of total output within an economy. And when we have to measure the total output within an economy, we're talking about the national expenditure, we're talking about the national income, and we're talking about the national output. So the three of them will still give us the same circular flow. So for measuring the output of an economy, I wrote, we can measure the output of an economy as of an open economy or closed economy. So we're going to start with a closed economy. Why do we call it a closed economy? We call it a closed economy because it's a simple economy where there's no government intervention and there's no foreign trade. So we call it a closed economy because there's no government intervention and there's no foreign trade. Do you get that, please?
Is there some current closed economies?
Right now, we can't. I think when we talk about closed economy, can we do without? There's always interdependence between economies. There's no economy that can stand on its own. Do you get it? There's no economy that can stand on its own. That's why we have globalization. But we have to talk about it too. Do you get it? So in this type of economy, it simply means those that are involved are households and firms. Is it possible?
No.
There's no economy that has no government. So there's no closed economy. Do you get it here?
I get it.
Okay. So here I wrote, a closed economy. This is a simple economy where there is no foreign trade and no government. That means a closed economy. So this economy only has households and firms. Households own the wealth of the nation. They own the factors of production. They supply these factors to firms in return for income. So it's circular. Household, they own capital, labor, and land. So they sell these things in exchange for income. They sell to who? They sell to the firms. The firms use it to produce goods and services which has to be sold to the household. So it's from household to firms, firms to households. That's why we call it a closed economy. So I wrote. They own the factors of production. So they supply these factors to firms in return for income. So these incomes are in forms of wages, interest, rents, and profit. This is what households will earn. Then they will be used in buying goods and services produced by the firms.
Mm-hmm.
Do you get it?
Yeah.
So firms produce goods and services by hiring factors of production from households and sell back to households.
Mm-hmm.
So that's what we call a typical closed economy. Do you understand the closed economy?
Yeah.
Great, thank you. So for a closed economy, it is about households to firms. Goods are purchased. Goods and services are sold to households. Households spend on goods and services. Firms, they hire land, labor, and capital from households. Households get rents, incomes, wages, and profit from them. I think it's clear.
Yeah.
Any question about that?
Yeah.
So to measure the economic activity, so we measure economic activity in three ways, which is national output, which is O, national income, which is Y, and national expenditure, which is E. Do you get it? So why do we call it national output? We call it national output because it is the value of the flow of goods and services from firms to the household. So what the firms produce that they sell to the households is called national output. Do you get that?
Yeah.
Okay. Then we have national expenditure, which is the value of spending by households on goods and services produced by firms. That is national expenditure. Do you get that?
Mm-hmm.
Then the last one is national income. For national income, I wrote, this is the value of income paid by firms to households in return for land, labor, and capital. So what is being spent by firms to households in return of the land, the labor, the capital, which is interest, wages, profits, and rents for households. That's national income. Are they clear?
Yes.
So this simply means income, expenditure, and output are three ways to measure the same flow. So it means income, output, expenditure, they measure the same flow. So it is explained as this. O equals an identity the same as E. E is the same and equals to Y. Is it clear? Any question about that? So that ends a closed economy. So now we're going to
Injection and withdrawals.
yeah. So we'll go to injections. So we're going to injections and withdrawals. Previously we talked about the closed economy. In the closed economy, there's no injections and withdrawals because injections.
نعم. المرة الجاية لما بتخشي طاقتك.
So we continue with cash circular flow, and now we want to talk about injections and withdrawals. In a closed economy, previously we talked about closed economy. In a closed economy, there's no injections and withdrawals because a closed economy is that economy that all goods are produced within the economy without government intervention, and there's no international trade. That's why we call it a closed economy. But as soon as there's injections and withdrawals, it simply means it's an open economy. So here I wrote injection. Injection is the spending that doesn't come from households. So we call it injection because this spending doesn't come from households. If it comes from households, it's a spending, it's expenses. But here we're talking about spending that does not come from the household. That means it comes from other sides of the economy, other economic agents. So we have three types of injections here. We have one, investment in capital goods. So firms can also spend. When they spend on capital goods, that's investment. So that is injection. Do you understand injection here? Another spending is through government. Government is not a household, right? So if government spends also, it's also it's also called injection. And the third form of injection is spending on exports, which are foreigners. So when foreigners buy our goods, that's also part of injection. So these are the three types of injection we have. Do we get it first? Do we get it, please? The first injection is spending by firms on new capital goods, such as factory, offices, equipment. That's injection. Another one is through government spending. So government will spend to maybe on spending on public goods. That's also injection and exports. So whenever we do export, it means foreigners are buying our product. That's also part of injection. Is injection clear?
Yes.
So that injection is part of an open economy. Then we have withdrawals. For withdrawals, I wrote this. We call it withdrawals. Another name for withdrawals is leakages. Leakages in the economy. So these are spending that does not flow from the household to firms. They are spending, but they don't come from the household to firms. So we call it leakages or withdrawals. So we have three forms of withdrawals too. We have one, saving by households or firms. So when households or firms, when households and firms, they save, it means leakages. Money is not going to the economy, it's saved. Do you understand?
Yes.
So it's literally, our firms will not spend all their money on wages and salaries or on purchases. They will also save. So when they save, it's part of leakages because it's saving. Saving means not spending. It's only when you spend that you're injecting into the economy. Do you get that, please? The second form of withdrawals or leakages is tax paid to government by household or firms. So if households pay taxes, it is part of leakages or withdrawals. Or firms, if they pay taxes, they are not spending taxes. So it goes to government. Do you understand the second one? And the third one is imports. So if firms also purchase equipment or raw materials from abroad, it is part of leakages because the money is going out of the economy. And if households too spend on imports, it is also part of withdrawals or leakages. Is it clear?
Yes.
Any question about leakages?
No.
Good. So both injections and withdrawals create an open economy. Is it clear there?
Yeah.
Okay. So we have a typical open or closed open economy. So for an open economy, it's from households. So we have our households and firms, which are part of the economy anyway, but there's expenditure and income. Do you get it or not, please?
Yeah, I do.
So what are the expenditures here? We have injections, which are investment, government spending, and export. We talked about that. And withdrawals are savings, taxes, and imports. So here I wrote, notice, investment, government spending, and exports are injection into the circular flow. They raise spending. So when there is injection, they increase the spending in the economy, and that means national income is increasing. So savings, taxes, and imports are withdrawals, and they reduce spending. I think the point is clear there. Okay. Then in some way, when injection are greater than withdrawals, national income will rise to reflect the greater spending. So national income increases when there is more injection than withdrawals. Do you get that?
Yeah.
Then when injections are less than withdrawals, spending will fall. So spending falls when injection is lesser than withdrawals. Withdrawals simply means we are saving, we are paying taxes, and we are spending outside of the country. So that makes national income to fall. Do you understand? Any question about it?
No.
So that ends circular flow of income. Thank you.